Hey everybody, welcome to a quick video on volatility markets and see what's going on out there. Some interesting behavior in the VIX today alongside the market. So we'll talk about the good, the bad, and the maybe. So we've got a little bit of worry. We've got VIX hanging in there, but why is that? Very good reason for that. The bad is we see a little bit of exuberance out there. Bit panicky, broader view is we've got a lot of gaps going on out there, but just a reminder, everyone, of the disclaimer. So anything we talk about today is for educational, entertainment, and information purposes only. In general, we've got this warm embrace of support. So let's get right into it here. So we've got the S&P. Look at what's happened here. We've had this interesting run since pre-election, lots of zigs and zags, quite a bit of volatility since the FOMC meeting in December. As we put in that really very difficult final week, which is very unusual, unseasonal. And since then, it's been quite volatile. Some of the largest bars we've seen in many months, going back to September and certainly August. So, but lately, going into the election, we had a little bit of negativity. We've had some higher rates, the 10-year yield really rising, long bond yields kind of rising. So getting people a little bit nervous again about potential inflation, things like that. But we got those nice GDP numbers, decent employment numbers, some good jobs numbers, and we got those very soothing inflation numbers, the CPI, PPI. So very, very soothing, a little bit of nervousness still, but then a run up into some optimism, a little bit of a second Trump bump. We had the original Trump bump, second Trump bump. But look at what's happened here. We've kind of had this big move from 580. I like to look at the SPY. Basically 5,800 on the S&P index. We've had this big move from under 5,800 all the way to almost 6,100. That is a very, very big move. I said in the community yesterday morning, I said, watch the VIX. It's probably going to hang in there because this is too strong. When you start to get these very almost parabolic type moves, the VIX starts to get a little bit worried about how far that can potentially extend, right? So volatility, we have to remember volatility can exist to the downside. It can exist to the upside. Typically, we're going to see it react a little bit more in terms of the VIX index to downside moves in the S&P. Part of that is we're just riding down the VIX curve, things like that. But to the upside, we tend to see it come down as we sort of ride down the VIX curve, right? So sometimes volatility doesn't do anything, but all we're doing is riding down that VIX curve. That's something I can get into in another video. But basically, we saw VIX kind of hang in there because this upside move has been too strong. Look at this, gap, gap, gap. Now we're hanging in there. So let's take a closer look of what this looks like, of what this did look like. I think it's kind of cool to watch as a lesson in how volatility can move. So we see yesterday morning, we had this, here's the VIX on the top. We had this sort of interesting, strange VIX settlement. So VIX expired, the near month expired there. So we had this bit, you can kind of ignore this a little bit. Then we sort of sold off. It probably expired a little bit higher than it should have, but we sold off down into here, into the high 14s. And then look at what happened. We had the S&P, nice big gap, really didn't give any back and sort of started to push higher. And as it did that, suddenly the VIX said, whoa, this is a continuation of this very, very strong move. So we saw we call this spot up, vol up. So spot being S&P or whatever stock you're looking at, that can happen in Microsoft, whatever. But spot up, vol up, which is unusual, right? Because typically we see vol gauges come down. We see the fear gauge drop into a rise in the market because people are less fearful, they're less concerned about things, and that's a normal correlation. Here we have them both moving in the same direction, spot up, vol up. We get to the highs of the day around 608, just below 608, and volatility is pretty much at the daily high if you don't include this silly print over here. Then we push up a little bit. Then the market comes down for a couple of hours, slightly down to 607, and volatility drops. So again, positively moving together, right? The correlation is positive, right? So we have the two moving together. I said, listen, what we need here is a bit of a relaxation in the market in order for VIX to come down, right? So we're sort of in bizarro world here. And I said that before the open this morning. I said, watch, we probably need the market to settle here. And don't be surprised if we see the VIX come down. And sure enough, we did. Here's the market coming down from those highs of yesterday and the VIX coming down with it. So why does this happen? Well, we've talked about this in MSTR as well, in stocks that can kind of go a little bit wonky and parabolic. I think they're great stocks to watch from a volatility perspective because you've got skew moving all over the place. You've got volatility levels moving all over the place. Really nice kind of a lot of things happening in a very short period of time. So great thing to watch to see how behavior plays into option pricing versus the underlying. So what happens is you get moves that are parabolic and you get volatility saying, well, hold on a second. I don't know where the top is at this point, right? So when you look at the S&P, for example, the vol market is saying, I don't know, is the top at 6,100? Is it higher? Are we about to go to 6,200? Are you about to go to 620 on the SPY? For all vol knows, that could be happening, right? So it is going to continue to price in the possibility of further movement, volatility to the upside, right? Upside volatility. And all it needs is a bit of a breather, meaning a pullback in the market to get that sort of relief and say, hey, listen, I feel like we've put in a bit of a top. And I think we could be, we could be establishing a bit of a range. Whenever it has no idea of where that range will stop expanding into, then it'll price volatility appropriately. So really kind of cool thing to watch, because that's when the sort of laws of physics break down a little bit because of what's currently happening. So let's take a look at, if we look at the good, the bad, and the maybe, we can see a little bit of the bad, which is upside call skew, meaning people buy calls in VIX when when there's some concern out there, when they want to hedge themselves. It's very, very high, right? So that upside call skew in VIX is still very, very steep, 94th percentile. In the S&P, very interesting action as well. So into the very, very end of the year, we saw that call skew, right? So that upside S&P skew come down a little bit. We saw it go up, 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 up throughout the fall. And then we saw it relax quite a bit. And now it's pushing up again. So what is this? Well, this is a little bit of exuberance to the upside. This goes hand in hand with really what we've been seeing in the markets. This probably was a bit of foreshadow because it started to go up. But here we are with upside calls. And why that happens? Well, it could be people just kind of feeling FOMO. They need to get some upside exposure. Maybe they're not invested enough. Maybe some people are covering shorts. But basically, you get this effect where they're starting to panic a little bit to the upside. So it can get worse. It can certainly buy up call skew to a greater extent than this. But at the moment, we've seen this maybe as a bit of a spot. So I drew this line here, which maybe shows you, hey, maybe this is a spot where the market can relax a little bit. And on the other side of the skew coin, we can see put skew coming down, right? So the specific, what this does is it breaks apart the typical skew measure and gives you call side skew, put side skew. So this makes sense, right? Call skew going up, put skew going down. And that's going to give us an opportunity to maybe pick up some cheaper downside hedges at some point. So really interesting kind of outlook playing out in volatility markets, in option markets. We can see that from a VIX perspective, dealers are still quite short, right? So I've been talking about that for about 5 months now, that the nervousness in the VIX complex is there. It's come down a little bit over the last couple of months, but it's still there. Make no mistake. I think it wouldn't take a ton to really get VIX panicky again, because we're only in the 11th percentile. Dealers are on the wrong side of this trade at this point, and that could push VIX up rather quickly. We do need that spark to create an accelerant that gets us into those upper levels of VIX where this could sort of play out. At the moment, there's no problem, but it could be part of what's keeping the VIX above 15. You see markets hitting all-time highs and the VIX is still 15. That's a bit unusual, right? VIX should be kind of 13 and a half, but it hasn't been business as usual over the last 6 months. So we definitely have to acknowledge that. And then this gets a little deeper into the weeds. VIX total Vega to buy per 10 points in volatility, meaning basically if volatility starts to get going, there's a lot of potential accelerant to the upside in the VIX, right? We have call options, big Vega, which can push things in that upward direction if we do start to get going a little bit. So a little bit of the good, the bad, and the maybe. The maybe is, well, we need something bad to happen, and then things could get ugly quickly. But in the meantime, I believe the warm embrace of support is right where we are. We're kind of between 6,000 and 6,100, which is exactly what I talked about, 200 points lower. I said, if we get back up into there, it was a big if, although I have been very bullish. If you sort of look at my commentary in my community, if I said if we get back above 6,000, we're going to be in this very nice, comfortable area where you're going to get much less of a negative dealer backdrop. You've got positive forces. You've got volatility targeting funds that are now having to reallocate to markets. You've got CTA funds having to reallocate to markets. You have got dealer supply getting replenished because people are coming in and going, VIX 15, 16, perfect. I'm going to hammer you with calls and try to generate a little premium in a market that's a little bit expensive, a little bit high at this point. It's kind of a perfect storm for those harvesters of call volatility. So those cover call funds come in. I managed around 700 million in those funds, and that's what we would do. You get a nice juicy bump in markets, a nice bump in vol, and that is your green light to basically hammer out. So dealers are going to take in more premium, and what that means is their hedging activity is going to keep us in this warm embrace of support. Is there something that can get us down below 6,000? Sure. I don't know what it could be. Could it be Japanese yen? Could it be, rates again, maybe starting to push up? I'm not sure. But at this point, there really isn't a ton to worry about. And I think it's starting to set us up for an interesting potential hedging environment. Maybe we can pick up some upside VIX structures, maybe some downside in the S&P to start to hedge out some of your exposure up here at these lofty levels where we may have a little trouble melting up at this point over the next couple months. Anything can happen, but we'll have to see. So hopefully you guys enjoyed that, and we'll see you in the next video.